Assalamu alaikum, everyone. Today is October 31st, 2021. Welcome to Wall Street to Bay Street, Sunday Chat with Sharia Portfolio Canada. My name is Nidhi Mia.
My name is Shamil. Get your chai ready and let's talk about the markets. So, Dean, big week. It is earnings season for some of the bigger companies this week. So, can we maybe start off by, explaining to some of our newer investors out there, what does earnings season mean?
Yeah, earnings season is basically the period where major corporations and most of the stocks that are listed on the market start to release their quarterly results to the public. And what this means is you're getting detailed kind of numbers as far as what they did for that quarter in terms of their sales, in terms of their earnings, and any other operating facts out there. So typically what it does happen after they release these results, senior management does a conference call to discuss these results between management and the Wall Street community. So we're talking about the operating environment, and also, the companies do tend to provide some forward guidance as far as what the outlook of business looks like, in the coming quarter and year.
Could you also maybe talk about why earnings are so important for investors to keep track of?
Absolutely. Um, you know, Corporate earnings ultimately can be probably the main driver for a company's stock price. Of course, there are other factors out there, but anybody who is looking at any company or any stock for that matter, or the market even, you know, corporate earnings is essentially what drives the value of the stock, and also the prospect of corporate earnings. Ultimately, for a company to be around and to grow, you have to have some surplus income so you can reinvest it back into your business, or you pay it off as a dividend, and that in turn creates shareholder value.
So, when we talk about earnings, a word that comes up quite a bit is the word consensus. So, could you maybe explain what that word means and kind of how it relates to earnings?
Yeah, sure. So, like I said, on the conference call, where the company does give some guidance, what tends to happen is, the Wall Street community out there, they will look at what the company is saying. They in turn come out and do their projections as far as what they think the next quarter might look like in terms of the sales, or in terms of the earnings of the company. And ultimately, what they'll tend to do is they'll come out with various estimates. Now, the aggregate of all these market analysts tends to become a consensus of sort, where you take a look at all the numbers that are out there, and then the mark the they're, I guess you could say, it's kind of like an average of some of the expectations and the targets out there. So what ends up happening is this becomes somewhat of a very important number, because at times what can happen is, say for example, you have a company that is expected to lose $1 per share in the next quarter, but the next quarter comes out and they only lose 50 cents instead of $1. And in some cases, you might see that the market might view this as a positive thing, and the stock goes higher. Whereas sometimes you might have a company that's expected to earn $2 and only earns $1, and the stock is down. So ultimately, the consensus number is a very important number that the market looks at. That essentially becomes the benchmark that the stock price is basically evaluated on.
Perfect. And now, now that we know kind of what earnings is, this last week we did see, some of the bigger name companies such as Facebook, Apple, Amazon, Microsoft, and Google all release their earnings. So maybe can you walk us through how that went for each of those companies?
Yeah, sure. I mean, it was a big week. All those companies that you mentioned, that's about $9 trillion worth of market cap right there. So starting off, I guess, with the bad, Apple and Amazon came out, and they basically missed their both. They missed their sales and their earnings for the quarter, and also gave some disappointing guidance. In Apple's case, basically, a lot of it had to do with some of the supply issues out there, where I guess there's some shortages. We talked about this before. There's some shortages in chips and whatnot. And whereas with Amazon, there were a number of things. They cited a bunch of things. They cited labor shortages. They cited, higher shipping costs. And so, these are all, and of course the supply constraints, right? So these were all kind of, some of the negative stuff. And as a result, both of these stocks were trading down after they released their earnings.
All right, awesome. So now that we know about Apple and Amazon, maybe let's walk through how Facebook, Microsoft, and Google did.
Yeah, so Microsoft and Google actually reported much better numbers. Both companies, their revenue came in higher than expected. Their earnings came in higher than the market expectation, and I mean, even the guidance wasn't too bad. I would say, these are both companies that had strong, like their cloud business was strong, and you can make also the argument that these are companies that don't have too much exposure to supply constraints, and that wasn't actually one of the things that was discussed. Like, whereas with Apple and Amazon's conference call, you had the word supply constraint coming up, whereas with Google and Microsoft, it wasn't so much of a hot topic. And finally, of course, Facebook was somewhat of a mixed quarter. They did beat the earning expectation, but the sales came in on the lighter side, and the company also did kind of throw some caution out there that Apple's new privacy, the new privacy thing that they're doing, actually did kind of hurt some of their business. So overall, I guess you could say, when you look at those big five tech companies, you had two good, two bad, and one kind of in the middle.
Awesome. So yeah, that's pretty much all we have for today. So as always, from Nadeem and myself, thank you so much for joining us and bringing your chai with you. And if you do have any questions or comments, feel free to put them in the comment section below. And we'll see you next week.
Thank you. Assalamu alaikum.
Nadeem Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.